My name is Robert McLean. I'm the publisher of The Prime. I'm speaking today with Omar Sattar, who is head of capital markets at Colliers. So, Omar, welcome.
Thank you, Robert. Thank you for having me.
You've had an interesting career path, sometimes in agency, often on the client side. How is the investment market these days different than it was back in the day, which, let's say, even though we've been here longer, let's talk about the 2010s, for example. I'm assuming that your time outside the agency fold has given you insights that are sort of useful for your current clients?
Yeah, well, the environment and the landscape of investment has changed in the Czech Republic. The point of view from building point of view at the beginning of the 2000s, going to 2010, assets were trading that had just been built. So it was the first trade. The developer had built it and he had sold it. And then we went into a phase, where people hold assets for a period of time, whether it be 5 or 10 years, and then they were retrading. So you had that element going in when it wasn't just the first buyer after the developer who purchased. And then we've had an emergence of different kind of investors, that's changed over time. Initially it was German and Austrians, and then it kind of the geographic spread widened when we had capital from other parts of the world, US, for example, looking at it. And then laterally, even some Asian capital came into the market. And then probably in the last, say, 5 years, it's come a lot more domestic, as we all know. And that's one of the major trends that we've noticed in the investment scene for the Czech Republic.
That's a great roundup, and sort of brings us up to today, when I guess Eurozone inflation is down, Czech inflation is pretty low. It's been a pretty encouraging start to the year from an investment point of view. But are investors waiting for lower interest rates right now before they pull the trigger, or are the vendors doing that?
I don't think they would like to have lower interest rates. Naturally, the cost of debt is a big play or a big factor in any decision making. But as you know, interest rates have been trickling downwards. I think some rates have started to become a bit more competitive when you're borrowing. And I think just the pressure or weight of capital and people wanting to get on and do transactions has been probably the main catalyst behind why we've seen a growth in deals happening and transaction volume, gradually increasing over the last 12, 18 months.
I mean, how would you describe, what we've seen over the first half of the year? I mean, I saw your Q1 report. It showed a good amount of activity, but what are you expecting for the remainder of the year? I mean, is this sort of pressure building up in a way that the dam's going to bust and everything's going to be up for sale, and there's going to be a scramble for things? What are you envisioning?
Well, just to take it back a step, so we've as you pointed out, the first quarter and the first half of the year have been quite exceptional.
Yep.
I think we're going on just slightly above 2 billion in transactions. About 1.5 billion of that was in Q1. So I think if you compare that to the last 2 years, it's like 2.5 times more transactions in that period of time. And in terms of looking forward for the rest of the year, I mean, you could easily see transactions getting to 3 billion. Easily, given some of the transactions that have been well documented or reported about in the press or by you that are either under offer or on the market or being considered. So, and these numbers at 3 billion are very healthy numbers for the Czech Republic. It'll be amongst the highest in the last 10, 15 years. So we've seen a growth in transactions is what we are seeing, and I think that people's perception of when to get into the market. So there's been a couple of years of lower transaction volume. People have been keeping their powder dry and now feels the right time to get back in again. So I think that's what's happening now. In between, you've also seen people raise more capital, so that plays a big part.
I mean, I can think of like half a dozen deals that have the sort of major ones, whether it's Redstone buying a couple of buildings, or PPF taking on 4 Seasons. Rico looks like it's going to be active on a rather large deal. What are we learning about the market and about both investor interest and like vendor plans, and how does that color the way you're planning for the rest of the year?
I think, well, people are looking to place capital in good product. I mean, that's probably the baseline of any investment decision, and you'll hear, people using those terms or terms similar. So you have a situation where there is a need to spend money, to invest money. And that's what's creating the additional volume. In terms of vendors, I think I had a period of time where there was virtually no stress on the Czech market in the last 3 years. We didn't see major distressed assets coming to the market, major repricing, as we did see in some other markets. So I think vendors have been able to also hold back if they feel that they're not getting value for their asset. So in terms of selling, the selling comes from a range of different pressures. Whether you are closing the life cycle of a fund, whether you're looking to recycle capital, give it back to your investors, or whether you want to change your strategy and look at something else. So these factors come into play regarding the vendor side and what's behind their decision to buy. But we had a period of time, as I said, where there wasn't significant pressure on a vendor to sell if he didn't feel he was getting value for money.
I guess I'm curious what would push them potentially into like greater likelihood that they're going to sell. If it's like lower interest rates, that might paradoxically increase the amount that they could get, for example, for a building, because there's going to be more competition, or there might be. You can think of recycling equity, but I'm not sure there's that much of a culture of that here. So, I mean...
Well, it's a combination of factors, and one of them is lower interest rates allow people to bid a little bit higher on an asset that they're looking at, is one factor. And then secondly, the point that we've already been made is that there has been, a growth in capital raised, and coming into retail funds, coming into Czech qualified funds. So vendors see an opportunity where you have a liquid market, where you have investors with cash equity able to deploy. So, there's a good match, and maybe the timing is right to start engaging into transactions when before you felt, pricing wasn't quite there as a seller. Maybe you had doubts about, capital being raised. But I think that bid-ask gap has narrowed and is facilitating more deals to happen.
It does feel like the only pressure for that could push more deals into the pipeline of deals is coming from the buyer side. Is this building up of cash that you can only hold in cash so long before that's unacceptable for the fund? Partially,
but not only, Robert. Not only. I think you can't put it totally down to that there's a buyer is because of the buyer's market. I mean, people want to sell their assets for a whole host of different reasons, and we can see. I mean, there's been some. If you look at some of the vendors, some of them have decided that their future no longer lies in the Czech Republic, and are exiting, from their portfolio. Yeah, so that's not necessarily because there's a backlog of equity being raised by funds. It's because a strategic decision was made.
Sure. Point taken. How do Czech commercial assets stack up against, say, Polish assets? I mean, is there a discount on right now for Poland, and sort of what's that based upon?
I think from the numbers, yeah. I mean, you would be probably wrong to say there isn't a discount on Polish assets. I think if you see the yields that they are trading at, or the reported yields that they're trading at, they're at a discount. In terms of just looking at the prime numbers, prime yields, they're probably 50 to 75 bips difference between the Czech Republic. Not many deals happen at the prime end of the market. There's only a handful. So please take that into context. Not every deal that happens is a prime deal. And the reason maybe why that's happening is that the makeup of the capital in that market has been more international than it has been in the Czech Republic. And those international players that have made investments in Poland might have issues elsewhere, might need to have a liquidity event. And therefore, they've decided, we want out of our Polish assets. And I think that's been the difference. Whilst here, going back to my previous point, a lot of the owners of the assets here are Czech developers, maybe Czech funds. So they see that they see it's a domestic market. They view it differently. They're much more comfortable in this arena.
They're never going to escape because time gets tough because they own the buildings and they understand it. There's no country risk.
They're not going to escape. They have a different view on country risk, and not all of them are investing in other European markets just because either not comfortable, don't have the infrastructure. Some of them are for sure, and we can speak about that. But we have a slight difference in the, I say, structure of ownership or the types of capital which is in the Czech market versus the Polish market. Polish market's a bit more international, and I think that's some of that capital wants to leave Poland. As a result, to leave quicker, you've had to lower your price expectations. So that feeds into this price differential that we see between both markets.
It's been very interesting, I think, for Poles to see the Czech investors coming in.
That's a good point, because one thing they don't have is they don't have a makeup up. They don't have the infrastructure yet. An investment infrastructure, right, as we all know, has been well documented for Poles to find an investment product to get into real estate. I mean, that might be changing, as we're talking about Polish REITs eventually being established. So Czech Republic had the backbone of that. Poland doesn't have that, doesn't have it yet. That's also another feature of their market, a different feature of their market compared to the Czech market.
That may be changing, but for the time being, they don't have the retail funds, they don't have the SICAV funds.
Yeah, so they don't have that pool of liquidity,
right,
which we tend to have. So unless it's a high net worth individual who's made money in another business looking to diversify their portfolio and get into real estate, they don't have that many Polish options. Domestic options in terms of investors.
I continue to be surprised that, in a market like Germany, which is quite close by, and there's been some real repricing going on there, that we haven't seen more Czech funds going there. Little glimmers of it, or maybe I'm missing it, but I'm just curious if you've seen any signs of that happening.
I think Czech funds have been looking.
Okay.
Yeah, but other than a few names that we know have made an investment, very few have yet. I don't know the reason for that. Maybe they just feel more comfortable in a Slavic-speaking environment. I don't know.
It does come down to what you know. You can't invest in stuff you don't know about and don't feel at home with. On some level.
Exactly. Maybe there's just more I'm just guessing.
Sure.
Could be a bit more affinity in Poland than, say, going to Germany.
Yeah.
I'm just guessing. It's just a hunch.
The new kid on the block in real estate investment, I think we could say, is build to rent. How big a role is BTR now playing in the capital markets for the Czech Republic? And what do you think its potential is? How quickly is it likely to grow?
From what I recall, I mean, it's roughly speaking, we're seeing deals of annually about 150 to 200 million, more or less, over the last 4 years. If you take out one very large transaction, which happened, 5 years ago when Heimstaden bought Residomo, which was, in the billions. So generally we've seen like these kind of 150, 200 million of transactions per year, which is about, say, 10% of the market, 10, 12, depending on any one year. Now, that market is in its infancy, and it's growing. So far, the deals either tend to be forward purchases, and a number of smaller deals as well. And I could say that probably looking forward, that is probably a growth market, in terms of its significance or its share of the market, or more people feeling comfortable in acquiring BTR assets. It seems to be a growing sector. What's slightly keeping it back just now is supply and perhaps the returns. I think the rents are still maybe not at the levels that some people would like to see them at. So returns become a little bit marginal for some investors to enter that market. But I think there is a drive for more to get into. I think some of the demographics would back that up, in terms of growth of population in cities, affordability of buying is increased. You could say affordability of renting is also increased as well, if you look at the statistics. But definitely from the side of the coin of affordability of buying, if people can't afford to get on the ownership ladder, then it naturally pushes them into renting.
It's hard to see it not taking off just at least theoretically, just because I don't think anybody expects the price of housing to go down.
No, they don't.
And as you say, rents, it's a bit underpriced at the moment from a rent perspective. That means it's got tons of growth built into the market, at least based on the expectations of everything we've seen happen in residential over the past 15 years.
No, it does, and some people are backing are looking at that. I mean, there are some significant players. Afi Homes, you have České bydlení, you have Mint, you have Zeitgeist, you have Kooperativa, you have Ryko. All and there's various others. Have not mentioned looking or already invested and looking at other opportunities in that market.
Yeah. On a price per square meter basis, isn't residential space simply more valuable on some level than offices? I mean, I've spoken with developers who wanted to do office buildings, say 5 years ago, when they maybe got halfway through their planning process. It is coming to market now, and they're like, we're doing residential because it just makes more sense. It's worth more.
Well, it is. I mean, depending on location, but yeah, I mean, just throwing numbers. You have 6,000 euros per square meter residential prices versus 4,500 euros per square meter capital value on, say, office. Depending on what the office is, just rough numbers. But then it's not always easy, to get the site with the right zoning, permitting. Do you really want to take the risk and trying to rezone something which was zoned for commercial or office use, and try and repurpose it, or not repurpose it, but to change the zoning so you can get residential use? As we know, that
carries certain risks.
That carries problematic obstacles in the Czech Republic, which we don't need to go into in this podcast. No. And also, not everyone's set up to do it. If you're an office developer, you can, a flick of a switch, all of a sudden become a residential developer or residential developer. You need infrastructure in terms of expertise, what size of units to build, the marketing side of it, how you're going to sell those units, etc. So there's also those considerations as well. And then, given the thing that we talked about, permitting, some of the developers who do residential have been holding that land for a long period of time, so they've taken it through a permitting phase to get it to where it is. They've increased value by getting the right permit or changing permit or whatever. Yeah. Now, if you're not in the residential market now and you're entering it, unless you buy a site with a building permit, and that's difficult and expensive, you've got to go through those 4 years or whatever of challenges.
Mm-hmm. What would it take to rekindle international interest in Czech commercial assets? Is it a pricing issue? And on a broader level, is it a problem that it's not at the moment?
Good question, as they say when you don't know how to answer. It's a combination. I think one of the things is a number of international investors I've just seen more value in other markets, maybe because they're a bit more familiar with them. And also some of them had issues in other markets, so they had to plug holes. They had to deal with their portfolio, whether that meant disposal of other assets. So it took their concentration away from the Czech Republic. Many of them will say they currently can't compete with some of the local funds. Local funds more familiar with the Czech Republic, maybe, and as a result, a bit, maybe can be a bit more aggressive on pricing. That's one of the reasons. And some of them saying they don't see the right deal, whether it be, and this normally comes around size of deals. Some of them are only looking for deals over a certain hurdle, say 100 million or whatever. And, those deals are limited. There's not that many, on the ground. So it's a combination of factors. Will it come back? I'd like to think that it will. I think things go in a cycle. Just now they're not here. Maybe they are rebalancing or maybe repairing their portfolios and looking at other opportunities in other markets. But I think some of them keep their eye on the Czech Republic, still want to be informed about deals, some have bid on transactions here. So they haven't completely gone away. Just now they're maybe just not as competitive as some of the local funds. Yeah.
I mean, if the repricing in Western Europe is done, which seems to be a general consensus at the moment, is there an argument for bringing prices here down further? It's hard to imagine local landlords, owners of real estate agreeing, if prices aren't falling anywhere else, to prices falling here. And there's not a lot of impetus for them to do so.
Yeah. Prices did fall here for a period of time. There just wasn't at the prime level enough transactions to support. The prime yields for a while have been theoretical. This is what we think someone would pay for this asset, and you need a willing buyer and a willing seller. So if seller is not willing to accept a certain price, he feels that he's being not getting full value for their asset. Is there pressure for prices to come down in the Czech Republic? I would think no. My head tells me no. Because it's already been partly repriced. Some of the deals that happened were happening, around the 6.5% levels, whilst before they were transacting at yields lower than that. Maybe what we didn't see is major change in our prime yields. Significant. They did go up a bit, maybe not as much as some other markets.
Yeah.
But then, people tend to be less leveraged in the Czech Republic. We had other dynamics like lack of stock and of new supply into office market. So people didn't feel frightened about buying an office building here because, the competition is limited. Also in industrial, not significant amount of vacancy in our industrial market. So, those factors there, I think, has kept prices, relatively stable.
That's an argument for justifying the prices that are as they are in a way.
And just now we have a weight of capital. There are buyers out there who are willing to pay that price. So, is there much pressure on prices going down? Probably not. It's probably a bit more pressure on some yields coming down than there is maybe on prices coming down.
Well, we'll know more in about a year, won't we?
Yeah, when we look back.
Right. Well, Omar, thank you very much.
So thank you, Robert.